And I know that actually Forbes actually publishes a Forbes 50 blockchain list, and I believe it comes out every April.
Mhm.
And on that list, right, there are actual examples of big firms, both here in the US and internationally, who are actually using blockchain in their core operations, right? So over there. But in terms of actually some of the applications of it, any business or enterprise, be it healthcare, insurance, IP, intellectual property, uh, anything with transportation, real estate, any company, any industry, any area that has to handle large quantities of information and has to be able to transact and to be able to convey those quantities of information to external parties is a prime candidate to actually use blockchain itself as a enterprise application.
Welcome to AFO Wealth Management Forward, a podcast about finance, accounting, technology, and entrepreneurship. We apply our decades worth of experience and insight into what makes businesses work so we can help others grow both personally and professionally. In this ever-evolving marketplace, we help accounting firms and financial advisors grow their practice through the adoption of holistic wealth management services. Learn from industry leaders and subject matter experts to unlock the secrets of their success. A podcast that shows people and companies the transformative power of technology so they don't fear it, but instead harness it. Don't fight the robots, team up with them. And here are your hosts, Rory Henry, Director of Business Development, and CEO Rob Santos of Arrowroot Family Office.
Hello and welcome to AFO Wealth Management Forward. Today, we have the honor of being joined by Dr. Sean Stein-Smith, a professor at Lehman College, a member of the Wall Street Blockchain Alliance Advisory Board and the Gilded Finance Board. He's a part of the New York State Society of Certified Public Accountants 40 Under 40, recipient of the New Jersey Society of CPAs 2019 Novation Award, American Institute of Economic Research Fellow, and a Forbes crypto contributor. It's long-winded. The list goes on and on for this man. Without further ado, Dr. Sean Stein-Smith. Welcome, Sean.
How's it going, Rory?
It's going great. Great. And we're joined by Rob Santos, CEO of Arrowroot Family Office. Rob, how you doing?
Doing well. Can't complain. Excited to have Dr. Smith on. Big fan of his Twitter account and his Forbes articles. So really excited. And I think it's just a perfect time to have someone like him on the podcast.
All right. Well, let's dive right in here, Sean. For our audience, as accounting firms mostly, can you do just a brief description of what blockchain is in cryptocurrency?
Yeah, sure thing. So if you're trying to analyze what actually blockchain is from a sort of data management, enterprise, onboarding point of view, it's basically trying to store and to transmit data between anybody who's a part of that network, either inside the firm or outside the firm, and to do so on a continuous basis, and to do so in a manner that, up until now at least, has been unhackable. So it's basically a upgraded way for anybody, right? Be it a firm, individual, enterprise, all the rest, to actually try to manage their information, their content, data in a way to actually try to get the most out of it. Okay, blockchain. Now, where all the hype is, right? Bitcoin, cryptocurrencies, all the rest, all that those are, right, are applications running on top of that underlying blockchain. Every single cryptocurrency out there, and there are over, I think, 5,200 of them right now being actively traded. Every single one of them has to run on top of a underlying blockchain. So it's always important, I think, for any firm, partner, manager, owner to be able to really ID, are we talking about blockchain itself in terms of actually being used as a sort of data management tool, or are we talking more on the Bitcoin crypto asset side in terms of holding it, being paid in it, paying our suppliers in it? And so from a operational point of view, I'd say that's the core point to always ask first. what aspect are we actually trying to talk about here?
Yeah, that makes total sense. And I guess kind of a next segue into that, could you maybe just, talk about a few things in kind of today's market about the value of blockchain and cryptocurrency, both as a utility and kind of an asset class, as it's being used kind of today?
Sure. And I know that actually Forbes actually publishes a Forbes 50 blockchain list, and I believe it comes out every April.
Mhm.
And on that list, right, there are actual examples of big firms, both here in the US and internationally, who are actually using blockchain in their core operations, right? So over there. But in terms of actually some of the applications of it, any business or enterprise, be it healthcare, insurance, IP, intellectual property, uh, anything with transportation, real estate, any company, any industry, any area that has to handle large quantities of information and has to be able to transact and to be able to convey those quantities of information to external parties is a prime candidate to actually use blockchain itself as a enterprise application, right? Right, because anybody who's worked in banking, accounting, markets, any aspect of that knows that probably the top drag on time is trying to get confirmation, right? Trying to get on trades, payments, inventory. That's always a tremendous drag on time, resources, energy. And so having you and your external partners as a part of this underlying blockchain, as a part of this blockchain network, now all of you have access to the transactions, to those confirmations, to those payments, all the rest as they happen. And so in terms of applications, that's honestly where the true upside is for most enterprises trying to use actually sort of a enterprise blockchain as a sort of data management tool. Now, in terms of the crypto asset side, now it all depends on who is asked, right? Right, because the whole underlying idea of Bitcoin, it was just a libertarian idea, which is fine, right? But the whole idea it was to try to build out this alternative payment system, financial system outside of the payment processors, banks, governments. And to date, that hasn't really happened yet. One, the actual processing speed of the Bitcoin blockchain is not up to par to actually handle enterprise level transactions. And two, I mean, who right now is actually going to spend Bitcoin on anything? To buy a Tesla, to buy pizza. I can't think of anybody. And I spent all day talking to people in blockchain, crypto asset areas. And I can't think of anybody I know who's actually looking to use Bitcoin as a currency. So in terms of sort of where crypto assets fit in terms of their applications right now, I would personally argue that we are starting to actually see Bitcoin plus everything else, right? And so Bitcoin, it's the biggest, baddest, highest profile, highest worth. It's worth north of $1 trillion now by its self. And then the rest of the coin token crypto asset marketplace is actually where most of the applications are coming in terms of actually being used either inside a entity as sort of a points almost option, or trying to be used as a currency option.
Yeah, no, that's wonderful. And in our practice over here on the financial services side, you touched on a lot of it, and that decentralization of trust, right? So you're
Yep.
talking about like confirmations of exchange of data, some stuff that we see about going to be disrupted by blockchain, or things like title for people's homes. Right?
Yep.
Everyone knows that they pay a tremendous amount for a third party to verify the transfer of the title of a home. And blockchain can do that securely, more efficiently, and instantaneously for everyone. Account opening documents, anything that requires some kind of verification, like we were saying, from a third party, is really going to be disrupted by this. And we think that is both scary for a lot of people, especially we have a lot of accountants that are using our program. And so, we'll get to that later on. Certainly on the value of the cryptocurrency is something that's really kind of top of mind because it's in the press so much. So that kind of leads to the next question is, do you think the broader retail population should be, investing in cryptocurrency as a kind of, alternative asset class, or, how would you, prepare the average person out there thinking about if they should invest in cryptocurrency or blockchain?
Yep. Excellent question there. And probably the opening statement I would make is to always talk to folks like Rob, his team, to actually have them help you understand your own risk appetite, risk outlook, all the rest. But after that, right, how to choose how to get yourself educated. Personally, I would say that the best place to go is to actually go to and to try to do your homework on Coinbase, right? Coinbase is going public via a direct listing in April, right?
And Coinbase being one of the largest wallets or
Yes.
Places that an actual retail investor could purchase one of these cryptocurrencies.
Yes. Sorry. Yeah. And it's the actually largest one here in the U.S. And so on their site, in their S1, in their sort of press outlet, items, they have quite a bit of educational content outlining sort of what is Bitcoin, what are cryptocurrencies, how they fit into the sort of risk outlook profile overall. So personally, I would say that the absolute first item to handle is education, right? Do you actually understand what you're buying? All of us here understand, all of your audience, all of your external clients, I'm sure, understand equities, bonds, and all the rest. But actually, Bitcoin and other cryptocurrencies aren't really like traditional equities or traditional debt instruments yet, right? And that could always change. But I would say that it's really important to understand the overlap between blockchain and crypto, and to understand that even though they're all under the sort of crypto asset umbrella, there are big differences between the options out there in terms of their supply, in terms of actually who owns them, who controls them. Like Bitcoin is totally decentralized, not owned, controlled, by anybody, as opposed to XRP, which I know is currently going through its own fights with the SEC, but it's actively managed and controlled by a entity, Ripple. So all of that does influence what the risk actually is of these assets. But I would say that the overall sort of rule of thumb that I've heard, seen, talked about is that if you are comfortable after doing the education, all the rest, that if you were to allocate between 1% and 5% of your overall assets into crypto, that's a good place to actually start.
Got it. Yeah, no, that makes total sense. And education, obviously, number one thing to be able to do in tandem with your financial professionals, to be able to look at it. One thing that we tell clients a lot is, blockchain technology is a little bit like the internet. Everyone, when internet came out, everyone knew it was going to change the world in some form or fashion. And so, some of the cryptocurrencies, although different kind of asset classes, are kind of, an embodiment of using that platform. And we don't know who the winners or the losers are going to be. And people have, recollection of the .com bubble, where pets.com and all of these other things that were, allegedly going to be the biggest winners in these. We make it really clear that even though this is starting to become more institutionalized, certainly by the enterprise and by people investing in it as an asset class or as a currency or form of payment, is that it's still early, right? And we don't know, that we don't know who's going to be the MySpace or the Facebook out there in that regard. So super, super helpful.
No, and to sort of piggyback on that, Rob, actually, it's also a matter of trying to time this, right? Because, as you said, it's still very, very early, and it's always important to point out that we had the sort of infamous pets.com, but right now we have uh, Chewy.com.
Yeah.
And so the exact same idea can ultimately work out, but you have to be able to understand what the idea is, and ultimately right here, what is the business benefit of this asset, right? Of blockchain, of the individual crypto asset. Is there a sort of business application? Is there an actual benefit to owning it, either as a enterprise or as a asset allocator?
Speaking of owning an asset, let's now dive into NFTs if you can, Sean.
Oh, geez.
There's something new. This is what has hit the stage here in 2021. Everybody's heard of NFTs. So can you talk a little about what an NFT exactly is, and what's going on in that current marketplace?
Absolutely. So a NFT is a non-fungible token, which is a kind of convoluted way of trying to say that they are items that are not equal to each other. So I have two pens here, right? I have two pens here, and they're both pens, but they're both actually different, and I can't swap them for each other. Okay. So how do we connect NFTs to blockchain to Bitcoin? Okay. So NFTs have to run on a underlying blockchain, right? It's a crypto asset, so it has to be run on a blockchain. Most of them are run on the uh, Ethereum blockchain, and as opposed to Bitcoin, every single Bitcoin is exactly equivalent to every single other one, right? Dollar equals dollar, Bitcoin equals Bitcoin, and I can chop them both up. I can chop dollars into cents, Bitcoin into pieces, and I can use those pieces, Satoshis, to do individual transactions. Okay. Uh, NFTs don't operate that way. Every single NFT is a non-fungible item, meaning that it's individual and it has its own defining characteristics. Okay, great. So what does that all actually mean, right? So the highest profile NFT right now has been the Beeple art that had been sold in March for, I believe, $69 million. Okay, so what actually is that? And so here's where it can get a bit nuanced. So there is this concept out there that, okay, fine. So I have this NFT and it's linked to artwork, trading card, online assets, or a clip of a game. I know
Yeah, I
NBA.
remember a girlfriend of mine who works for a NBA player's family office. She said, "Rory, there's this LeBron James clip going for $50,000." I said, "Are you kidding me? A clip of LeBron James is being bought for over $50,000, which is ridiculous to me." But now this is what an NFT really is.
And yeah, but the actual owner of that NFT only owns that token, right? There is no direct ownership between the buyer, the NFT, and that underlying asset. So in terms of and and there are some efforts underway out there. Dapper Labs currently has a product and a plan out there to help NFT owners actually be able to monetize that underlying artwork to a certain level. But in terms of how it fits, right? So if I buy a NFT, I'm buying a token that is connected to a piece of, right now, either artwork, clips, and hopefully in the future physical assets. Okay, great, but what do I actually own, right? Right? Because I can go online onto YouTube, I can watch that exact same clip, right, Rory?
Yes.
And I didn't pay anything for it. And so I believe that's where there has been a bit of a overhype in this NFT space, bit of a bubble. And I saw a quote, I think it was on Bloomberg, that the average price for NFTs has dropped from about 20 million down to about 2.8. So there has been some overhype because I personally think that it was an idea and a concept that got out in front of actually where the mechanics were to have it work in terms of, okay, fine, so I have this, how do I monetize it? But you own a token linked to a underlying blockchain, and that token is linked to that underlying asset.
Great. And how is this taxed? As far as it long-term capital gains, is it short-term? How are these NFTs taxed? And I guess let's go back and how are cryptocurrencies taxed as well?
Sure. So every single crypto asset out there, Bitcoin, stable coins, or NFTs, are all taxed as uh, property, as per the IRS. Okay, so in terms of the actual rates, so if you hold it for over one annual period, capital gains. If you hold it for under one annual period, ordinary income. But NFTs adds a little extra sort of nuance in there, in as much as if it's classified, and to hammer this all out, talk to a tax pro, CPA, all the rest. But if your NFT is actually held classified as a collectible, then it's taxed at that incrementally higher rate. And if you are holding it as a collectible and you earn over a certain income level, then you owe a additional tax on top of that. So, long story short, NFTs are probably taxed, all else being equal, at the highest rate of any crypto asset out there as of right now.
And on that theme, kind of what are some of the big mistakes people are making around, CPAs and people around filing their taxes around these things? Anything that
So,
suggest to folks?
sure. So I would say that probably the top error that I see, that I hear about almost every day right now, is that individuals are not reporting crypto income, right? And
Mhm.
that is the number one error, and the IRS has been very transparent over the last 18 months or so that 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 the collection of that crypto income is a top priority for them. And actually, on the first page of the individual 1040, there is a question asking you, were you involved in any crypto um, transactions? And as a quick little PSA here, if you just bought crypto, right, used dollars to buy crypto in 2020, you don't have to check that box. Okay, the uh, IRS came out during March and added that extra bit of
Guidance.
transparency in there. But in terms of errors, right? One, they aren't telling the IRS that they have income, and two, there are all of these traders, right? Be it on Robinhood, Coinbase. There are all of these individuals trading crypto to crypto, converting crypto to other crypto, doing all of these transactions on these mobile apps, who are not aware that every single time there's any transaction using crypto, uh, and I can be selling it, paying for stuff in it, uh, trading crypto for other crypto, all of that means income taxes are going to be due. So one, it's the lack of transparency on the part of the individual taxpayers to CPAs, and then two, it's that again that educational component that individuals are not aware, right? Right, because it's called cryptocurrency, but it's taxed as if you're trading uh, equity shares. And then three, there is no obligation right now on the side of platforms like Kraken, Coinbase, uh, Coinbase, Binance, any of these platforms out there to actually issue you 1099s. Most of them are trying to issue a sort of proxy for that voluntarily, but there is no obligation as of yet. So now we have this whole outlook where individuals don't know, aren't saying anything, and then don't have the appropriate documentation to actually do so, even if they want to. So it can very very quickly become a huge headache for everyone involved.
Absolutely. And kind of going in that theme of investment,
Mhm.
taking a look at your Twitter account, we see that you
Oh,
talk
geez.
about Bitcoin IRAs,
Yes.
and so could you maybe just spend a minute talking about, what is a Bitcoin IRA and how people should think about, potentially utilizing it?
Sure. So a Bitcoin IRA, is a sort of, I think, a logical outgrowth of the increased interest, investment, and awareness of Bitcoin and other crypto assets. But I say Bitcoin really is the highest profile one as a true sort of asset choice, right? As a investment choice going forward. But there's only one small issue there. Under current IRS rules, calling Bitcoin property means that I can't put Bitcoin directly into any IRA currently operating. So in order to get actual Bitcoin, and there are Bitcoin trust products, Bitcoin ETFs, not here yet, but there are some up in Canada. But if I want to get Bitcoin proper, right, Bitcoin itself into an IRA, I have to actually set up a self-directed IRA. All sounds pretty straightforward, right? IRA, right? But there are some key items in here. One is that because it's a new, emerging, fast-growing field, um, not every operator out there has the same level of expertise, personnel, insurance, competence, to be honest, in actually how to handle customer assets under management. One. Two, they are not always, and the actual specifics of this, I would advise you to call Rob, Rory, and his team. There are some different rules, depending on actually what compliance measures have to be in place from a SD IRA angle in terms of sort of how they operate in individual states. And then three, it actually costs more in terms of operating fees to have these SD IRAs actually up and running. It's costing more just overall right now. And then the fourth point is that they almost always have a higher minimum opening balance to actually open up the SD IRA um, to begin with. So overall, costs more to operate, costs more to actually set up. You have to do more homework on the firm itself to actually have that same level of faith uh, in the operator. But if you are, and there are plenty of operators out there on the up and up. I believe I did have a hyperlink to them in the article that I wrote on this at Forbes. So I mean, there are plenty of ethical operators out there, but it's always important, I think, to be totally transparent as to the upside and to the cost of doing so. But for anybody who is trying to get Bitcoin itself into a IRA product, you have to go right now the SD IRA route.
Got it. No, very super interesting. And I guess kind of going to the next stage here is in a kind of broader sense. There's been a lot of talk about the classic 60-40 portfolio is dead because interest rates have gone down so much, and fixed income is potentially riskier for very little compensation as far as interest you're earning. Are you seeing kind of a fundamental shift towards away from that 60-40 and maybe utilizing some of these other asset classes to build out something for the future? Or do you still think that might be, obviously understanding risk and reward appetites, but putting our future hat on, looking forward, do you think this is going to become something that's going to be part of that traditional outlook as far as allocation is concerned?
And so if I had to count the total number of times that I've heard that the traditional 60-40 is dead and obsolete over the last half year or so, it would be hundreds of I think times there, Rob. But I think, yeah, there is going to have to be some sort of rebalancing, right? Right, because to your point, you have debt, fixed income, they aren't giving you the real rate of return anymore. And actually, there's a big chunk of that market that's actually negative. So that's not good. Okay. Equities are I would argue they are overvalued in some areas, undervalued in some others. But for a average sort of non-expert investor, it's overvalued, or it's higher valuations than you might otherwise see, as a direct result of all of the economic efforts underway right here in the US and overseas to help combat the economic damage of COVID. So, okay, fine. So what do I do, right? And I know back in, 06, 07, and then in the aftermath, 2010 to 2012 maybe, there was a big push towards private equity, non-traditional assets, but all of that is ultimately kind of tapped out for now. Again, there is this excess wall of cash out there at all of these funds, right? SPAC companies are just pots of active cash out there trying to find stuff. And so for a asset allocator, right, individual or institutional, how do I actually create any alpha, right? I do have to go to areas that are outpacing the overall market. And to be honest, there has been no other asset class really since about 2010 that overall, right? Hindsight is always 2020, but there has been no asset class that has outperformed crypto. And so ultimately, I think, and I do want to just point out here that there is this underlying sort of narrative that I hear that Bitcoin's going to be put out of business, that the U.S. government's going to outlaw it because they outlawed gold right back in 1930 something. Okay, and you know what? That could happen certainly, but I would argue that, well, with the biggest crypto trading platform going public, and the biggest asset allocators, asset managers actively trying to file for a Bitcoin ETF, I kind of find it hard to understand how then it's going to be outlawed. So to just sort of put that thought process down for a moment, absolutely, Bitcoin and other crypto, I believe, are going to be a part of the asset allocation conversation. Now, I don't know if they're gonna take the place of gold commodities, or they're gonna take the place of any traditional sort of private equity allocation. But I would argue that they're absolutely going to be a part of that conversation. And to add some extra hot sauce in here, there are also all of these options out here now for individuals or institutions who own crypto to actually earn income on that crypto in the form of other crypto. So as a sort of add-on to that, now we have the price appreciation argument, and we have the income generation option too. So from a high level, I would say it's I think a pretty easy yes.
Yeah. And, a lot of folks will remember when Jamie Dimon was asked about Bitcoin 5 years ago, and he said, only drug cartels and, uh, nefarious people are the ones that are using it. And I think in his annual letter this year, he was just boasting about how it's kind of part of the future and how they're embracing it. So, you got folks like Jamie Dimon out there that are obviously starting to see this as part of the future. So it would be hard, I think, to be able to squash that. Rory, you have any questions before I go on?
I think on the other end of that, though, Peter Thiel just came out, I believe, yesterday, the day before, and talked about the Chinese government utilizing cryptocurrency as a way to undermine, U.S. The U.S. government. Do you have anything to say about that, Sean?
I have a lot of thoughts on that, but I'm going to keep it family friendly, right? So I would say that one, it's always important, I found, over the last sort of 10 to 12-ish years watching Peter Thiel, to try to focus more on his actions and his investments, as opposed to sometimes what he is actually talking about on air. One. And two, I mean, sure, there could be some effort underway to undermine the U.S. dollar. I mean, I would hazard to actually say that the U.S. and mainland China are the two biggest economic rivals in the last 50 years. So yes, there are going to be efforts to outcompete, undermine, outsmart each other, and frankly, that's just part of how it's going to be. And then three, to sort of hop back to a earlier comment there, I think Rob said, and it's quite interesting that at JP Morgan, they have a price target for Bitcoin year end of, I think, $142,000. Yeah. And I would also just want to point out there that, that there was that argument that Bitcoin is used for drugs and crime, but that's also what the U.S. dollar could be used for too.
Yeah,
so.
Absolutely. And then, another question here, we, in tandem with the podcast, and we've discussed this, we've brought out a program called Wealth Management Forward, which is helping tax and CPA firms out there, not compete with technology, but partner with it and elevate their practice to more of a kind of advisory model. We would argue that being knowledgeable around crypto and this new asset class makes them better advisors. But could you maybe just speak for a moment about what you're seeing in the kind of accounting space, about how software technology is affecting that industry, and what some folks can maybe do to prepare themselves to elevate that practice and become that advisor of the future?
Sure. And I would say that really at every single accounting conference, show, podcast, there's always this effort to become that trusted business partner, right? Over and over and over again. But actually now the tools are out there to actually have us move up that ladder, right? But to help automate some of that bookkeeping, some of that tax stuff, some of that audit stuff, and to actually have more time for conversations, business planning, business advising, and to ultimately help our clients make better business choices. And really what I would say out there, what I've seen, heard, talked about, done, I'd say really the absolute most outside of blockchain crypto, I'll come back to that, but the one biggest item that any firm can do, large, medium, tiny firm, can actually do, is to automate what you can. And I know automation can be a headache. Trust me, I know it can be a hassle, a headache, because there's training, onboarding, testing. Isn't working right the first time, well, I'll do it the old way. No, but it's important to automate anything you can. I have a colleague and a friend of mine whose whole firm, he actually purchased the firm back in 2018, and his whole driving force after that purchase was to automate anything non-core to their operations: customer service, calendar management, emailing, customer follow-up, marketing, off hours customer service. All of that has been automated to help his practice actually focus more on client service. And actually, between 2018 and current, he's actually increased the overall size of the firm by, I believe, 25%. During COVID and all the rest, it's been increasing. So all of that, and there are options out there that are affordable, doable, understandable for any budget, any firm, any size. And I cannot stress that enough. For anybody out there: audit, tax, bookkeeping, compilation, anything. Automate anything non-core to your business. Because trust me, your external clients always have more work and more problems that you were able to then help them with, right?
Yeah.
And so to then just hop back onto that sort of crypto conversation.
Mhm.
I mean, my parents know what Bitcoin is, right?
Right.
That's about it.
Yeah.
And so if individuals in that boomer age bracket, and no ageism here, obviously, but even if those individuals in this boomer age bracket are aware of Bitcoin, aware of its opportunity now, those individuals are going to be doing the largest wealth transfer in US history over the next 5-7 years. And so any advisor who's out there who is kind of complacent, saying, well, I don't have to worry about it now. And it could be true. But if you want to ever actually have a exit plan, right? Or to hold on to your new external clients going forward, or to add new ones going forward, I mean, crypto and all of the other applications that are going to come as a result of it, right? Bitcoin, NFTs, DeFi, staking, all of these other applications sort of mushrooming out of Bitcoin are going to be items that investors are going to want their uh, advisors to be aware of, at the very least, right? To be able to have a conversation, to understand what questions are being asked of them, and to have those answers, if not right away, to at the very least be able to have the knowledge, have the context to go to find those answers for their external clients.
Yeah, it makes a tremendous amount of sense. And we talk about it a lot on the podcast about the largest transition of wealth ever in the history of the world about to happen. And, we really try to reiterate to a lot of practitioners out there that, one, denial is not a business plan. And two is that looking at things like you just mentioned, automation, utilizing software, partnering with the robots instead of competing with them, doesn't have to be scary, and also is an excellent tool to be able to recruit some new talent to your firm that maybe is more knowledgeable in how to use these software solutions, how to integrate them, how to test the automation. And we're seeing a lot of firms out there similar to that large transition of wealth, is that a lot of firms are finding very difficult to be able to bring new talent in and transition that leadership or transition responsibility to younger generations. And we see that more as an opportunity as opposed to a challenge, especially, like you said, all of the solutions that are available out there for people to utilize. So I think that really resonates. I guess kind of, wrap it up, in the next 10 years here, some big ideas that you haven't kind of talked about, where do you think in kind of 10 years, do you think the big things out of this are going to be? Do you think it's going to be a nationalized cryptocurrency? Is it, going to be blockchain kind of taking over a lot of the supply chain? What are the kind of big ideas that kind of Star Wars predictory type of things that you think will happen in kind of 10 years?
Star Wars, awesome. So what I would say there is that yes, there's absolutely going to be some sort of centralized nation state cryptocurrency. Now, I don't know how it's going to play out. I have no idea who is going to be first. I know that mainland China has one actually being tested right now, and that I think raises a whole host of other questions. But I do believe, right, that there is going to be some sort of dollar-backed cryptocurrency. There are talks underway as we speak on that exact idea, right? There are projects underway in I think something like 82 countries, and they're already out there. The Bahamas has one, and there are a handful of other nations out there. So yes, I mean there is going to be some sort of, I think, bifurcation in the overall crypto asset marketplace. Bitcoin as a investment, cryptocurrencies that are used as actual currencies, and then what I think is arguably going to be more interesting, crypto products, be they ETFs, NFTs, or some other acronym that I haven't thought of yet. And in terms of actually blockchain, I would argue, and I am aware that in 2017, in 2018, there was this whole movement of it's blockchain, not Bitcoin. And so, it can come off as a bit tired, but I think Bitcoin has a definite role out there in the financial markets. But in terms of applications for actual blockchain, I think that two that are going under the radar right now, kind of for obvious reasons, are blockchain for healthcare, and trying to track, manage data, treatment, shipments, vaccine data, all the rest is a huge area that obviously is on the back burner right now. But in 2018, 2019, it was a really hot area. And then two, outside of trying to make buying houses easier, track my Amazon items easier, Apple's more transparently, this whole idea of a self-sovereign ID, right? And so I have some harsh facts right here. Probably all of our IDs are on the dark web somewhere, right? Just fact to life. But a real cause of that is that our personal data is everywhere. It's at every doctor's office, every DMV, every place that I go has a copy of all of my data. Why? Right? In a perfect world, right? Or in a world that can help to be created by having that blockchain integrity, I can then have custody over all of that information and only have to, I guess, actually show that information to the entities that need it at the point in time, for a on-demand, really, ID system. And I believe that there are a lot of applications for that, both in terms of trying to cut down on IDs being stolen, but also in terms of trying to streamline how data is managed, right, at that entity level and from a individual outlook too. So I would say that there are obviously going to be developments in sort of the crypto asset space, obviously, right? But in terms of blockchain applications, that's really hard to pin down, because as a CPA, right, probably the audit is the most obvious application, right? If I can have a comprehensive audit, 100% or almost 100% audit being done on a continuous basis, that's going to fundamentally change that 1/3 of the accounting field overnight. Income taxes are immediately after that. And so then all of us are going to have to figure out how we're going to evolve, develop, and to move into new areas of advisory services. And I would argue that going forward, that overall there is going to be a huge uptick in having analysts to help analyze this huge trove of information, right? Being 5G data, Internet of Things, and having these AI programs collecting all of this data, great. What do we do with it, right? So I have this output dashboard. What do I do with it? And how is that going to drive the firm forward? And so I would say that there are going to be a lot of opportunities linked to blockchain itself and some blockchain adjacent applications.
It's scary, but yet promising here, Sean. It seems like, once again, we go back to, teaming up with the robots, not fighting them. So I think we want to end our show here and, tell our audience how they can get a hold of you, where you're located, your Twitter handle, your LinkedIn and all that stuff.
Absolutely. So I'm on Twitter, LinkedIn, at Sean Steinsmith. Easy to find, and I post stuff every single day.
Yeah, we really enjoy it, and we really appreciate you coming onto the show, Dr. Smith, and looking forward to doing it again sometime soon. But thanks again for all of your time.
Absolutely. Thank you guys so much.
Thank you.